welcome you. Today we're taking a deep dive into some really critical developments impacting trade and investment between India and the United States.
Yeah.
It's a really fascinating, quite complex picture, actually, with a lot of moving parts we need to unpack.
Absolutely. We're going to explore the evolving situation around tariffs, those powerful geopolitical currents shaping these discussions, and crucially, what it all ultimately means for investor sentiment and, of course, for India's economy itself.
Okay, let's start by setting the scene a bit. Not that long ago, it really felt like India was in a bit of a sweet spot, didn't it, regarding trade with the U.S.?
It did seem that way. There was optimism.
Yeah, talks of a bilateral trade agreement, a BTA.
Yeah.
There was even that joint statement aiming for a first tranche by autumn 2025.
That's right.
But now we're seeing talk of significantly increased tariffs. So what's the latest update on this shift?
Well, the latest indicates quite a significant turn. Indian exports to the U.S. are now set to face an additional 25% in tariffs.
25%?
Yeah.
Wow.
Yeah. And there's even a possibility of further penalties down the line, potentially linked to India's oil and military buys from Russia.
Yeah, okay.
So this certainly wasn't the expectation when those BTA negotiations started just 6 months back. The whole landscape has changed quite a bit.
And we heard about some initial reciprocal tariffs, right? Announced back on April 2nd, 2025. They were paused for 90 days.
That's right, they were.
The hope, I guess, was that a deal would get sorted before that pause ended on August 1st. What happened there?
Exactly. And it was quite surprising at the time that India attracted those 26% reciprocal tariffs while they were already negotiating.
Yeah, seemed odd.
Anticipation was definitely for a truce. But, well, as of August 1st, those U.S. reciprocal tariffs on Indian exports will kick in unless some last-minute agreement materializes.
Which seems less likely now.
It does. The negotiations have just become far more complicated than anyone first thought.
Yeah.
Heavily influenced by, broader global and regional geopolitics.
Right.
That's made reaching a conclusion incredibly difficult.
Okay, so that brings us right to it. Geopolitics. You mentioned these flashpoints. What exactly are the underlying political currents that are kind of derailing this deal? Beyond just the economic numbers, what's really going on?
Yeah. And this raises a really important question because the political side is arguably the most significant factor now. There seem to be primarily 4 major political factors at play.
4, okay.
First, there's the U.S. claim about mediating a ceasefire between India and Pakistan back in May during those hostilities.
Right. President Trump claimed credit.
Repeatedly.
Yeah.
And India has publicly denied that the U.S. brokered it. That denial is seen in Washington as, well, a direct snub. And that's certainly not helping smooth relations.
Okay, so a clear point of contention there. What's the second factor causing friction?
The second factor is Russia. Now, while President Trump's efforts to broker peace between Russia and Ukraine haven't, borne fruit,
Yeah.
the U.S. is still aggressively trying to economically squeeze Russia through various means, including penalizing countries with close economic ties.
And India fits that bill.
India, with its substantial, long-standing purchases of Russian oil and military products, falls squarely into that category. It's a major point of divergence.
Okay. And the third?
The third political current is India's membership in the BRICS bloc. President Trump seems to view BRICS as distinctly anti-American.
Especially the de-dollarization talk.
Exactly, especially with its growing de-dollarization agenda. His frustration really seemed to grow after the Rio summit in early July.
What happened there?
Well, BRICS criticized protectionist trade policies, clearly a swipe at the U.S., though they weren't named.
Ah, okay.
And it's probably no coincidence that some BRICS members, like Brazil facing 50% tariffs, South Africa 30%, and India now 25%, have been hit disproportionately hard by recent U.S. tariffs.
So it's almost like membership itself is seen as problematic. What's the final piece of this complex political puzzle?
The final significant factor is Iran's presence within BRICS, coupled with the U.S.'s, let's say, extremely strained relationship with Iran.
Right.
And that connection has directly impacted India's trade treatment. The U.S. has already sanctioned various global businesses, including 6 from India, for petrochemical trade with Iran.
I remember that.
So India's Iran link has unequivocally become a very sore point for the U.S. Just adds another layer of this geopolitical pressure.
Wow. So with all this complexity, these deadlines coming up fast, How have the financial markets reacted to all this uncertainty? What signals have investors been sending?
Well, what's really fascinating here is how directly uncertainty just weighs on investor sentiment. You see it every time one of these tariff pause deadlines approaches.
Yeah, markets get nervous.
They really do. They turn antsy, almost holding their breath. Investors, they crave clarity. They need it to make informed decisions, deploy capital.
Makes sense.
And the August 1st deadline was absolutely no different. We saw institutional investors largely just waiting on the sidelines.
Holding back.
Definitely. Their net inflow into Indian equities dwindled really sharply. It went from about rupees 2,500 crore, that's 25 billion Indian rupees on July 18th, down to less than rupees 800 crore, 8 billion rupees just yesterday.
That's a huge drop. Really shows their hesitation.
It really does.
The institutional numbers are stark, but how did this uncertainty play out among, say, retail investors? Did they react differently, maybe more? Apprehension?
Oh, indeed. Retail investor panic has clearly dragged down markets. The Nifty 50 index, that's the top 50 Indian equities, it's corrected by 1.4% just since mid-July, purely in anticipation.
Wow.
And maybe more tellingly, the mid-cap and small-cap indices, they're generally more influenced by retail flows, right? So even sharper falls, 3% and 5% respectively.
Ouch.
Yeah. It just illustrates how quickly market sentiment can shift with these trade and geopolitical tensions, especially when retail players get nervous.
So given these tariffs, the whole geopolitical landscape, what does this all mean for the Indian economy as a whole? Were those initial hopes, gaining a competitive edge?
Yeah.
Are they now crushed?
Well, if we connect this to the bigger picture, many of those initial hopes, things like India's textile exports getting more competitive against Bangladesh or really ramping up electronics exports, they've certainly been diluted by this latest 25% tariff on India, even that whole China plus one theme.
Right, diversification away from China.
Exactly, where global companies were looking to diversify manufacturing, even that's been affected somewhat. However, and this is crucial, the non-tariff arguments for shifting manufacturing from China to India, they still hold true, mostly stemming from China's policy uncertainty.
Like the zero COVID policies.
That and ongoing intellectual property risks, those concerns haven't gone away.
So things like supply chain stability, IP protection, those are still big drivers, separate from the tariffs. Like Apple, maybe. They moved some manufacturing even before this latest trade spat.
Exactly.
Yeah.
Apple's a perfect example. They significantly shifted manufacturing to India, and look at the result. India now claims a substantial 44% of U.S. electronics imports.
44%? That's huge.
It is, remarkably surpassing China's 25%. But here's the critical takeaway. While tariffs grab headlines, India's real economic superpower, it's domestic demand.
Like an internal engine.
Think of it as a robust internal firewall. Yeah. Household consumption accounts for a massive 60% of GDP.
60%.
While exports only contribute about 20%. And the goods exports, where these tariffs actually apply, they play an even smaller role within that 20%.
How small?
Only about a fifth of those specific goods exports actually go to the U.S.
Ah, I see. So even with a 25% tariff on certain exports, the overall hit to India's massive economy might be less severe than some might think because of the strong domestic foundation.
That's the real story here, India's resilience. Reports suggest that even if the full 25% tariff goes through, the overall impact on India's GDP is estimated to be, well, quite minimal.
Really? How minimal?
Around 0.2%.
0.2%, that's it.
That's the estimate. The economy is just fundamentally robust, resilient, because of that immense internal consumption strength. It acts as a buffer against these external shocks.
So specific sectors feel it, but the whole ship stays steady.
Pretty much.
Yeah.
Specific export-oriented sectors will definitely feel the pinch, no doubt. But the broader economy is largely insulated.
Okay. So, with all these complexities swirling around, is there still hope? Can India and the U.S. still reach a deal? What would it actually take for a resolution, given all these political layers?
Ostensibly, yes. I mean, the fact that both sides are still talking is always a positive sign.
It's true.
But getting there, it would require either India compromising pretty substantially on its current stance, or the U.S. scaling back its, frankly, increasingly broad demands.
It's not just about trade numbers anymore.
Clearly not. It's way beyond pure trade or economics now. To get a deal, the U.S. would likely demand far more than India has offered on market access, including concessions on what President Trump calls
What was it?
obnoxious non-monetary trade barriers.
Right.
And this is explicitly framed as the price for India not, quote, aligning with U.S. economic and national security interests.
Wow, that sounds like a very high bar for India to clear. Is this price for alignment something the U.S. is asking of others too, or is this specific to India's position?
It's certainly a strong and very overt position for the U.S. to take.
Yeah.
It really underscores this shift from just trade talks to using broader geopolitical leverage.
So India needs to be careful.
Very careful about the implications of conceding just for geopolitical reasons, because there's absolutely no guarantee the U.S. won't just demand even tougher concessions down the road.
Right, set a precedent.
Exactly. And as this situation shows, the U.S. has demonstrated it might even use political proxies, like those proposed economic deals with Pakistan, to exert pressure. So it's really important for India to hold the line on demands that could set a dangerous precedent. Now, while these tariffs will undoubtedly affect market prospects for some Indian exports, India does have other strategic options.
Like diversification. Looking beyond the U.S. market.
Precisely. Free trade agreements, FTAs, with key partners, the UK, the EU, Canada, other countries. Those provide crucial avenues to diversify export markets for goods.
Okay.
Furthermore, and this is a really significant point, the booming services trade with the U.S., that's broadly expected to continue undisturbed.
Why is that?
Well, the sheer number of U.S. businesses engaged with India in services trade, especially through those global capability centers, or GCCs.
Right, the back offices, R&D center.
Exactly. That ensures this crucial segment of trade continues. Honestly, it's in the larger U.S. revenue interest for this vital services sector to remain undisturbed.
Interesting point. So after all the back and forth, the actual 25% tariff announcement finally came on July 31st. How did the markets react when the news actually hit? And what's the longer-term outlook for investors in India, given this ongoing dynamic situation?
Well, buoyed perhaps by confidence in India's underlying economic resilience, and maybe just a sense of relief that the immediate tariff uncertainty was over.
An end to the waiting game.
Sort of, yeah. Markets tried to shrug off the announcement. The Nifty 50 opened 0.9% lower on July 31st. But then, as news circulated during the day that maybe the tariff was more of a negotiation tactic
Maybe not set in stone.
than a final immutable stance.
Yeah.
The index actually recovered significantly during the day, though it did eventually close about 0.35% lower.
Okay.
President Trump himself even said, "We'll see what happens."
Leaving the door open.
Exactly. Indicating there's still room for a rollback or more talks, which definitely takes the edge off some of that earlier uncertainty.
So a bit of a roller coaster, but a sense that maybe there's still play in the game. It makes you wonder, in these high-stakes negotiations, how much is just brinkmanship versus a real hardening of positions? What does this mean for investors looking ahead, beyond the daily headlines?
That's the core question, isn't it? And look, periods of higher volatility interspersed with moments of calm. That's really par for the course in stock markets.
Especially with geopolitics involved.
Absolutely.
Yeah.
But over the long term, that daily noise, it tends to fade. And the fundamental strengths, they truly shine through. Now, are there challenges? Yes. There are legitimate near-term challenges to India's growth: patchy domestic demand, sluggish private capex.
We've seen that in earnings.
Exactly. That's affected earnings in recent quarters. But India's long-term fundamentals, they continue to hold immense promise.
So for long-term investors?
For long-term investors, strategically, they should view significant short-term dips caused by this kind of volatility as opportunities. Opportunities to accumulate fundamentally strong businesses at attractive valuations.
Buying the dip, essentially.
If the fundamentals are sound, yes. It's really by remaining patient, by hanging on through this kind of volatility, that the powerful compounding effect truly comes into play. That's what enables substantial long-term wealth creation.
So what we've really seen today is this incredibly complex interplay, isn't it? Trade policy, high-stakes geopolitics, and their immediate, often quite volatile impact on the markets. It's just a powerful reminder that these global events are deeply intertwined. And understanding the nuances, the economic, the political, the strategic, it's absolutely key. It really leaves you wondering, doesn't it? How will this whole diplomatic dance ultimately shape the future of global trade relationships?
Indeed. And on that note, we absolutely must emphasize we are not SEBI-registered financial advisors.
Very important.
If you are considering making any investment decisions based on what you've heard today, please consult a certified financial advisor first.